The US is now officially in a recession, and many are already starting to feel some economic pain. However, there are some key economic indicators that suggest that this could just be the beginning, and there are some economists that believe that something much worse than a recession is coming. Today I'll be taking a closer look at some of these predictions and where America's economy could potentially be heading in the future. So to kick things off, let's have a look at where we are today. So a recession is officially defined as a period of temporary economic decline during which trade and institutional activity are reduced, generally identified by a fall in GDP in 2 successive quarters. New real gross domestic product figures came out last week for the second quarter of 2022, and they did come in at a 0.9% decline. Now this follows the 1.6% real GDP decline for the first quarter of 2022, therefore marking 2 successive quarters of GDP decline and officially signalling the start of a recession. So despite 2 consecutive quarters of economic contraction being widely accepted as the normal indicator for a recession, the Federal Reserve and the Biden administration have come out and stated that the US is not in a recession for the time being. Rates were also hiked by a further 0.75% last week, which was expected, with Powell reiterating that the Fed is committed to bringing inflation back down and taking the necessary measures to do so. So it is becoming clearer and clearer that the Fed vastly underestimated inflation, thinking that it was transitory, and by the time that they realised that inflation wasn't going to go down on its own, it was too late and there was no way for them to actually stop it from reaching the highs that we are seeing right now. And many economists believe that the Fed should have been more proactive and started to raise interest rates a lot earlier than what they have done. But that being said, 2020 and 2021 were fairly unprecedented times in the world, so they probably didn't want to make any decisions too early on in the fear of damaging the economic recovery that we were experiencing from the global pandemic. So although the recession has only just begun by official terms, nobody knows how long or how severe this recession period could be. However, one lagging economic metric that certainly hasn't yet become problematic is unemployment. Jerome Powell did say in a recent FOMC meeting that he thinks that we need a period of low growth and softening in the labour market conditions, i.e. job layoffs. So for now, unemployment is around 3.6%, which is a figure that is on par with what we had before the pandemic, and it's also considered to be quite low overall. However, as I mentioned before, unemployment is a lagging metric of how well the economy is doing, and historically it has taken a year or two to actually start rising once a negative economic event happens or a recession has started. In particular, unemployment usually lags in correlation with the interest rate, so as interest rates are raised, unemployment historically has risen with it, but lagging by a couple of years. So now let's move on to some arguments why a severe financial crisis could be on the way. So Nouriel Roubini is an Iranian-American economist who successfully predicted the housing crash 15 years ago, and he currently teaches at the New York University's Stern School of Business, while also being the chairman of Roubini Macro Associates, an economic consultancy firm. And he did recently appear on Bloomberg in quite an alarming interview where he stated that he is predicting a severe recession and a severe debt and financial crisis. So he also does believe that the idea of a soft landing, or that the recession is going to be short and sharp, is total delusion in his own words. So part of the reason behind this prediction is the fact that the debt ratio is currently historically high at 350% of GDP in advanced economies, and is rising as well. He also said that there are many zombie corporations that are operating right now. So countries are printing and borrowing far more money than what they have done before. And looking at this graph on the screen now, you can definitely see a sharp rise in debt from 2020 onwards, especially looking at the percentage of GDP metric, which is the orange line. So many of these so-called zombie corporations are not profitable companies, and they are only operating due to the availability of cheap money that they've had access to in recent history, as well as artificial demand from increasing the money supply. So he also refers to the 70s, where we had stagflation, but also had low debt ratios, and also after the global financial crisis in 2008, where we had a debt crisis, but inflation was falling and actually entered deflation because there was a demand shock. But this time around, we have stagflation as a result of negative aggregate supply shocks as a result of lockdowns, supply chain bottlenecks, and the impact of the Russia and Ukraine war, as well as having debt ratios that are historically high. So this means that we essentially have the worst of both worlds. Rubini makes it clear that stagflation and debt ratios have counterbalanced each other in previous recessionary periods, as one has been high while the other has been low. However, in the present day, in 2022, this is not the case, unfortunately, and we have a double whammy, effectively, of looming stagflation while also having historically high debt ratios. So on top of this, he also says that in the previous recessions that we've experienced, we had massive monetary and fiscal easing. However, this time around, we are entering a recession while tightening monetary policy with no room for fiscal easing. So most of the fiscal ammunition has already been used and public debts are becoming quite unsustainable. And then on top of this, high inflation is not just isolated to several countries this time, it's a global phenomenon in which most central banks around the world are tightening at the same time. So this is increasing the probability of a synchronized global recession. So the stock market had dropped by over 20% since the peak at one point. However, it has since recovered quite a bit and is now only down by around 12% from the peak. So Nouriel believes that this recovery will not continue for much longer and ultimately sees equities plunging even lower than the previous low. He does believe that despite equities tending to fall by roughly 35% in normal recessionary periods, this time it could be a lot closer to 50% as a result of the next recession being stagflationary while also being accompanied by a financial crisis. So regardless of what Nouriel's overall outlook is, he does raise a good point about historic stock market declines during a recession, and looking at the stock market crashes during the global financial crisis, as well as the crash that happened in the dot-com bubble, there were certainly some bear market rallies that happened along the way. So looking back at between 2007 and 2009, where the stock market ultimately fell by around 50%, there were a number of significant rallies that took place along this time period. So we are currently up by about 12% from the lows that we saw in the S&P 500 in mid-June. Obviously, many people are hoping that this rally continues and turns into a full-on recovery. However, history does show that it's certainly quite possible that this could just be a bear market rally that ultimately ends up in there being a continued stock market crash. I also wanted to talk about some comments that Donald Trump recently made, where he believes that something worse than a recession is coming for America. So the former President Donald Trump has warned that something worse than a recession is coming to America and has said that America's economy is on track for a big disaster. So specifically, he signalled out the collapse in America's real wages, a historically depressed labour force participation rate, and the Democrat push for the Green New Deal that he said would crash economic growth. Now, Trump also did take shots at Joe Biden's handling of the economy, blaming him for the soaring inflation that the country is experiencing right now, even suggesting that the actual inflation number is much, much higher than the 9.1%, which is the official figure. So Trump believes that the high inflation and economic slowdown has put the country on a devastating spell of stagflation, which is a combination of accelerating prices and also slowing economic growth. Trump then also believes that Biden's policies around American energy are to blame for pushing up gasoline prices, as this has halted new oil and gas drilling leases and has ended fossil fuel subsidies. So to try and help keep oil prices down, Biden did order the release of oil reserves from the National Strategic Reserve, as well as calling on US refineries to boost output and push OPEC to pump more crude oil. So taking barrels of oil from the National Reserve is not a good long-term plan, as these oil barrels will need to be brought back, you'd think, at a later date in order to restore the previous reserve levels to a healthy level. So this could work out quite well if oil does fall quite a bit in the coming years. However, if it does not and it actually goes back up and America starts to replenish their reserves at these prices, then this could put serious upward pressure on oil prices even further, and it could drive oil prices up to new all-time highs. Obviously, it's worth noting that Donald Trump is a clear opposition to Joe Biden, so he's probably going to be inherently biased against what Biden's doing in office. But I do think despite that, he does make some interesting points in these comments, and it's certainly worth considering what he has to say. So that is all for today's video, guys. A bit of a mixed one today, just sort of touching on some interesting comments that quite significant people in the finance and economic space have recently come out with. It's certainly definitely some food for thought here, thinking about the ultra bear case for where the economy could go in America, and where that could lead the stock market to end up. But it's worth noting that this video is purely based on my own research and my own opinions. It's not financial advice, and I'm not a financial advisor. But with that being said, guys, if you did enjoy the video, please be sure to leave a like, as that does help out a lot. Also, drop me a comment, let me know what your thoughts are on the economy right now, as well as where you think the economy will end up further down the line. Subscribe as well if you want to see more videos similar to this in the future. And apart from that, guys, thanks a lot for watching.